Okay, guys. Our next chapter is rules and regulations. Okay. So before diving into the chapter, you need to understand audit has a set of rigid rules and regulations which we need to follow, and that is the ISAs. Clear?
Yes.
ISAs along with the IFRS standard, IFRS. Clear?
Mm-hmm.
And this all became so rigid because of the two popular scandals. Clear? One of them is Enron scandal, which you would be studying in this chapter, and the next you would be studying in the next chapter. Clear? Okay. So
Okay.
basically, I want you to what I do normally is I make the students read this particular thing before the class itself, even before I take this. Okay. Since
Okay.
uh, since I have not told you guys, I it's just skipped my mind. So I'm going to just give a brief thing of what has happened, but I want you guys to work on this. Okay, especially Samriddhi,
Okay.
because you're going to have much more professional skepticism in AAA than AA. Clear?
Yes. Yes.
Okay. So Enron scandal, what happened is Enron is a very large company. Okay, very large company it was. Okay. And earlier there were big five companies. That means the audit firms are big five. Clear?
Mm-hmm.
Okay. And among that big five, one of the audit firm did what the auditors are not supposed to do. Okay. That is, they uh, gave a cold, or they just turned a blind eye over all of those that were happening to Enron company. Clear? That is the
Mm-hmm.
basically that is the story behind this. Okay. So what happened was, the company is the largest supplier of natural gas and electricity, right? And the Enron's accounts were severely manipulated. Okay. As in, they have used a certain shell companies, or the small SPEs, okay, special purpose entities, in order to you know in order to make all the manipulations. Clear?
Yeah.
Okay. So they had a high cost of capital. Okay. And they hid the debt in SPEs, right? So they are giving out a better picture of themselves by manipulating all those accounting system inside their company. Clear? Okay.
Yeah.
And
Mm-hmm.
this was like huge amount. Okay. This was like huge amount in millions and billions that we're talking about. Clear?
Yeah.
Okay.
Yes.
Now, this was something that the auditors could have easily got hold of, right? Okay. However, what happened was that Arthur Anderson, okay, who was auditing that company, were not able to bring this out in public. Okay. So you can see, if an audit firm that was in Big Five could not detect all these manipulations in the accounts that has happened in this company, it is unbelievable, right? Okay.
Mm-hmm.
Years and years of experience and could not find something, a big scandal as this is unbelievable, right? So naturally,
Mm-hmm.
what happened? There were investigations going on in Arthur Anderson. Clear? Okay.
Yeah.
Now, finally, in June 15, 2002, you don't need to study the dates. You don't need to even remember the names and stuff. You just need to understand that this happened, and it is why the auditors or the audit firms as a whole had to suffer. Clear?
Mm-hmm.
That means why is audit this rigid? It was because of those famous scandal. Even in UAE, what happened? I think 2 years back or 3 years back, a big company did the same, right? And
Mm-hmm.
it was also audited by a similar big firm, and which was brought out into the open. And that is why now UAE audit rules are very rigid, right?
Yes.
Same way, also, Enron scandal attracted the worldwide attention with this particular thing. Understood?
Mm-hmm.
Okay.
Yes.
So this also not only affected the audit world, it also affected those employees who were working in Arthur Anderson as well. Clear? I think around over 15,000 employees were laid off. Okay, and they were not getting job elsewhere. So everything, the entire audit market collapsed. Clear? Because
Mm-hmm.
after the scandal, people had less trust in the audit firms. Understood?
Understood.
Okay. Now, the principal people who were involved in this fraud were the chairman, CEO Kenley, CEO Jeff Skilling, and CFO Andrew Fasto. Okay.
Mm-hmm.
So, all these were a deliberate manipulation in order to inflate the laws, okay, in order to, everything that is, they were doing everything, putting forward best image of the company while the company was literally tarnishing inside, right? And
Mm-hmm.
also all the accounts were manipulated using shell companies or special purpose company. That is what you're going to study in SBR. Okay, so we have a provision to create companies within companies, certain segment, right? So Enron used that same thing, twisted in their own way in order to manipulate things. Understood?
Mm-hmm.
Okay. So this Enron scandal actually exposed a what do you say, a weak side of the audit perspective, right? So
Mm-hmm.
as a result, what happened? New rules and regulations were designed. Clear?
Mm-hmm.
Okay. Now it was upon the professional bodies to win back all the trust that were lost due to Enron scandal, right? So they
Mm-hmm.
brought the three initiatives. Okay, first one is harmonization of auditing procedures. That means everybody would follow the same procedures on the same sync, right? Second
Mm-hmm.
one is the audit quality standards. So the overall audit quality standard was improvised. Okay, and the third one is the ethical code of conduct was made very strict, right?
Mm-hmm.
So if I'm an auditor myself, I am looking at a client company and someone I know is there, what would I do? The first thing I would do is report to my seniors, right? That this and
Yes.
this person is here.
Mm-hmm.
Okay. Or if I have been working with a client for too long, more than 8 years, 9 years, right? So what would
Mm-hmm.
I do? I would shift onto a separate team, or I would back myself out from that audit, right?
Mm-hmm.
So all of these were additionally introduced. All the strict ethical code of conduct was additionally introduced in order to not make another scandal happen. Clear? Okay.
Clear.
So there are three regulatory bodies. Now what we are going to talk about is UK thing. Okay, and also mixed USA. Okay. So first thing that was first thing three regulatory bodies are there. The first one is National Corporate Law. Okay, and these are the laws that were in place in order to protect the companies. Okay, and there is Companies Act 2006 in UK and Sarbanes-Oxley Act in US. Sarbanes-Oxley Act is much more rigid and much more stricter than the UK Company Acts. Clear?
Mm-hmm.
Second one is auditing standards in place, right? That is international standards on auditing. Third one is ethical conduct, ethical code of conduct. Okay. Now, we need to understand who needs an audit. Okay. If a company is compulsorily liable to audit their financial statements, then that is one thing. Okay. And the second one is in UK, all the companies except which is a small scale company, okay, needs to do their audit. Okay. Now, how do we know that a particular company is a small company? By looking at their turnover. Okay. So if their turnover is less than 10.2 million, they don't need audit, or they don't necessarily need an audit. Okay. Second one
Mm-hmm.
is gross assets. If it is less than 5.1 million, they also don't need the audit. Okay. And the third is if the number of employees is less than 50, then they also don't need an audit. Okay.
Okay.
Now, sometimes there are certain industries or specific industries which compulsorily need audit. Example, insurance, bank, stock exchange, etc. Clear?
Mm-hmm.
Now, why do we not need small scale companies to do the audit? First thing is owners and managers are basically same. So the first lesson that we talked about, where an audit is performed for the shareholders to use, or an audit is performed so that the shareholders is ensured that their company is in good hands, right? So here the
Yes.
owners and the managers are the same. Okay, so basically owners are also involved in maintaining the accounts, books of accounts. So why need the audit, right? Now,
Yes.
second one is the advising is just limited to accounting and tax. You don't need to have big plans and big things in control. There might be less of control systems, right? So the basic advice that you would give would be on how to account certain things or how to calculate their tax, right? Third one is uh, all the companies, their statements or the amount of their statements or the values in their statement is very low, and it doesn't create or contribute to the economy, right? So even if they run out of business, it is not going to affect the economy, hence it is not needed. Clear? And the
Clear.
fourth one is small companies might be earning very less in compared with the big companies. So the cost and benefit thing is also there. Clear? Now,
Clear.
who can be an auditor? How can someone call themselves an auditor, or who is qualified to be an auditor? If the person is from a recognized supervisory board, okay, or recognized qualifying body, RSB or RQB, for example, such as ACCA, CA, CPA, right? So all of these people can be an auditor. Understood? Okay.
Yes.
Now, who is an RQB? RQB is an association who is going to award the necessary qualifications that are necessary to complete an audit work, right? Okay, and their entry is strictly authorized by the state. Clear? Now, the third one, the supervisory body, that is the RSB, right? So, RSB is also a group of association which enables or which permits its members to conduct audits. Clear?
Clear.
Okay. So, if an auditor is eligible, okay, to do audit, that means they are under RSB or RQB. Clear?
Mm-hmm.
Understood? No?
Yes.
So, anyone beyond that is not actually an auditor, but it is not the case. Even if you're studying ACCA, there are people who are getting into audit fields, right? Even
Mm-hmm.
if they haven't completed CA, they are getting into audit field, right?
Yeah.
Okay, so
But they're
it's,
not holding senior level
yeah, but they can't
position.
go the level up. That's it.
Yeah, they can't go. Yeah.
Yeah, but they do the ground levels, right?
Yes. Yes.
Okay. Now, the auditor is should be such a person that he has his own opinion, so he is able to give an independent audit report. Clear?
Mm-hmm.
Now, who can't be an auditor? If the auditor is employee within a company, he can't be the auditor of that company. Clear?
Clear.
Now, second one, directors or secretary of the company can't be an auditor. Okay, now owners of the company can't be an auditor. Okay,
Mm-hmm.
the people who have personal connections with the company can't be an auditor. That means if they own the shares of the company or so. Clear?
Clear.
Fifth one is if the person feels that if he is getting that client, he might sacrifice his code of ethics, then he can't be an auditor. Understood? Now,
Mm-hmm.
who appoints the auditor? First of all, it is the shareholders. Okay. But often what happens is shareholders are not involved in, uh, they are not too much involved in appointing the auditors or fetching the auditors, right? So what happens
Mm-hmm.
is usually the directors are the one who is going to appoint the auditor. Understood?
Mm-hmm.
Just a moment.
It's okay.
Okay. So what usually happens, directors are going to appoint the auditor, okay, who's going to fill the casual vacancy that happens, right?
Mm-hmm.
But they are just going to give the suggestions. Ultimately, it is in the hands of the shareholders. Clear?
Clear.
That means the shareholders are going to conduct, or the company is going to conduct an annual general meeting, and in that meeting, they'll decide. Clear? And
Mm-hmm.
the third one, if the shareholders fail to appoint an audit, The directors are not appointing the auditors either. Then the third thing is the secretaries of the state. That means the government is going to fix an auditor themselves. Clear? And
Clear.
this that we are talking about is the companies where the compulsory audit is there. Okay, understood? Now,
Yes.
auditors of public companies are appointed from one AGM to another one. That means this is basically the same with all the companies. Okay, it's not just the public companies. Everywhere it is happening. Okay, so what happens?
Okay.
When you are going to appoint the auditor in this year, they're going to perform the audit, and this particular auditor would be under discussion for the next year reappointment as well. Clear? And
Mm-hmm.
it is going to be specified in the report, audit report, that you're going to give them. Okay. Now, the second is the auditor of private companies are not removed, okay, until they are removed. That means if I am auditing a private company, they have hired me, until they say so, I am going to work there. Okay. Until they say that we are not supposed to work there as an auditor, we are going to work there. Clear?
Mm-hmm.
Okay. Now, why are the auditors not sorry, why are the shareholders not appointing the auditors? That is, the first appointment is a casual vacancy. Understood? Okay. So, if the auditor's vacancy is there, okay, the directors are more likely to know of the field than the shareholders, right? So, what
Mm-hmm.
happens? The directors are going to appoint or fill the vacancy. Okay. And this
Okay.
would and this vacancy is filled casually. That means there is no annual general meeting. Clear?
Mm-hmm.
Second one, if the auditor is going to resign, okay, then also there becomes a casual vacancy again, right? So in that case, the auditor is going to be appointed by the directors only. Clear? Now,
Mm-hmm.
if there is a scenario where the directors have appointed the auditor, and it has been going since years, okay, and the shareholders have no displeasure or have no intention in order to replace their auditors with any other auditors, then also this is a reappointment which is happening on a renewal basis, right? So every
Mm-hmm.
year they would confirm that for the next year you are going to be our auditor. Clear?
Clear.
Now, appointment of auditors. So, it is appointed by the directors in annual general meeting. Okay. And sorry, shareholders in the AGM, and directors are going to casually fill the vacancies that happens in the company. Okay. And if the directors are not appointing, the of states would interfere and appoint the auditor. Clear?
Clear.
And the auditor is going to be in the office from one annual general meeting to the other. Clear? And private companies has no such obligation, or the auditors need no such confirmation from private companies. If they are audited for this year, okay, and if they have not been refused yet, then they automatically becomes an auditor for the coming years as well. Clear?
Clear.
Now, auditor removal. Okay. Somebody, you there? It's too late there. You don't sleep, okay?
No, no,
The
no, no,
problem
ma'am.
with the audit class is that people sleep.
No,
I
no,
don't want
ma'am.
that.
No, no, ma'am.
If it was a offline class, I used to do activities with students.
No, no, ma'am.
I used to stoop low to their level and do things. Okay. Now, auditor removal. Okay. So, auditor can be removed if he has completed his terms of contract. Okay. That is one thing. And if the company feels that the auditor is no more suitable, okay, to carry out their work, then the auditor could be removed. Okay. Now, this removal is not something that happens on a whim. There are certain procedures in that case. And the first procedure is that it should be removed in a general meeting, which should be held. Okay. And more than 50% of the shareholders should be saying yes to that removal. Understood?
Mm-hmm.
Second one, there should be, that means this general meeting is not taken suddenly as well. Okay, that means if the auditor is not continuing the audit, then there should be a circular released. That means a notice released. Okay, and this
Mm-hmm.
notice should be 28 days prior to when the GM is going to be held. Clear?
Clear.
Third one, okay, auditors are or auditors behold the right to be heard. Okay, that means the auditors can request statement of circumstance, SOC. Okay, this
Mm-hmm.
SOC should be circulated to all the shareholders. Clear?
Clear.
Now, the auditor has the right to also attend the GM and say the story on their side as well. Clear?
Clear.
Clear. And the fifth one, this resolution, that is, if the shareholders have decided to discontinue with the auditor, then this particular resolution should be given to the company's registrar within 14 days itself. That is to the company office. Understood? That is
Mm-hmm.
the, registrar, you guys know registrar?
No.
Somebody must know, you know, company house.
Like
Company
companies
house.
register.
Yeah.
Yes, yes.
Okay. It is a house. See, it is a body that is going to handle all the paperwork of the company. Understood? Yes, Sarah?
Understood.
In a simple
Mm-hmm.
term. Okay.
Okay.
Now, the auditor can be removed if the majority of the shareholders feel so. Okay, or give a nod. Okay, and the auditor himself, if he feels that this audit is not for him, or he does not wish to renew the agreement or the engagement, he can discontinue. Clear? Or if
Clear.
he feels that there is something wrong and he can't actually continue the audit, then he can resign. Clear?
Mm-hmm.
So depending
Clear.
upon the professional judgment of the auditor, he can resign. Also, if the company no more wants the auditor to be assigned as an auditor again, then he can resign. Clear?
Mm-hmm.
Okay. So if the auditor and management is finding difficult to work together, this happens every time. That means until we get a rapport with the client, we are going to have that rift always. Understood? If you are
Mm-hmm.
going to be in the out in the world working for yourself as an auditor, I don't know which you guys want to be. So if you are going to be as an auditor, if you're going to be an auditor, what happens is that it takes time for you to build up that rapport with the clients. Okay.
Mm-hmm.
And sometimes that rapport never happens. Okay. So at that time, what is the problem? The client and the auditor wouldn't go hand in hand, right?
Mm-hmm.
So the auditor might resign. Okay. Now, this is the POV of the auditor. The auditor does not want to continue. So what will he do? He is going to deposit a statement of circumstance. That is the reasoning why he is leaving. Okay.
Okay.
Understood? Second is,
Yes.
if there is no circumstance, that means if there is no reason whatsoever, the auditor is just leaving and that's it, there is no reason. Then also he has to give a statement that he is leaving. That is like notifying. Understood?
Mm-hmm.
Three, he is going to promptly request clearance from the new auditors as well. Okay, that means when he is going to give up a company's audit, if the next auditors comes to that company and request certain things to be known, then he is liable to, or he is obliged to reply them. Understood?
Understood. So it's like a
Yes.
handover.
Yeah, handover. Same thing.
Mm-hmm.
Okay. Now, this doesn't always happen. This handover thing doesn't always happen. Most of the times, if you're going to get a new client, you are probably going to study the previous audited files and you're going to prepare your own. Sometimes it would do for small
Mm-hmm.
companies. Clear?
Okay.
Now,
Clear.
notifying ACCA. So, if the auditor is resigned or removed, okay, before
Mm-hmm.
even their terms of office have finished, okay, then it is necessary that they notify ACCA or the professional body they are connected with. Clear? Now,
Why?
these all are because there might be a reason, right, to drop
Mm-hmm.
off midway of an audit. Clear. Now,
Okay.
this is not the same scene with scenario with all the companies. It is just a thing about handling big companies. That means very big companies, which is going to make a big economical impact. Understood?
Okay. Okay.
Okay. Now,
Mm-hmm.
auditors' rights and duties. So, during the appointment, what all rights does the auditor have? Okay. First one, access to company's books and record is the first and foremost thing. That is a non-negotiable thing. Without the books of accounts, you can't do the audit. Simple. Clear?
Mm-hmm.
Now,
Yes.
apart from that, there are certain things. The first one is to receive all the information, all the explanation, and it should be at the reasonable time. That means if you ask for something today, the reply should be prompt, right? So often what
Mm-hmm.
happens in the real world, you're going to ask for requirements today and they're going to give it next week, right? That is the thing. That is the
Sometimes.
most frustrated thing. Okay.
Sometimes.
You have 100 clients, okay? Maybe
Mm-hmm.
99 percentage of them are good, 1% would, make you hate audit, right?
Mm-hmm.
So it
Yeah.
happens. Sometimes they give you promptly. Understood?
Mm-hmm. Yeah.
Just a moment. Okay. So, Samriddhi, to just give you a brief uh, on-hand experience on audit, what happens is that, first of all,
Yes,
the
ma'am.
stage of accepting a client or starting the continuous audit of a client is getting their trial balance. Okay. So,
Okay.
and if we get that trial balance, we are going to give them a list of items which we need to rectify, which we need to vouch. That means we have to make sure that is there, right? So, we are going to send certain things to the client, and the client is going to reply us back with all the ledgers that we request. That is going to happen. Okay.
Okay.
So, sometimes or most of the times, clients are very good. They're going to reply you soon. And rarely the client is going to be very bad that they are not going to approach you, right? So it depends. Now, the second one is that when you are an auditor of a particular company, you are entitled to be called in all the general meeting or the important AGMs of the company. Clear? Or at least you should get the notes of the board minutes. Clear?
Okay.
Third one, if there is any such meeting, and as an auditor, if it is concerned with the audit works that you have been doing, if it is concerned with the things that you have been dealing, then you have the right to be heard. Clear? Now,
Mm-hmm.
fourth one is that after every audit, you have the right to get the written resolutions from the company. Clear? Now,
Mm-hmm.
on resignation, what happens? You can request the company to hold an extraordinary general meeting. Clear?
Okay.
And you have the right to be heard. Second one, you have the right to this fact that the company should circulate statement of circumstances that relates to your resignation, SOC. Clear?
Mm-hmm.
Now, what is the duty that you hold? Behold, your duty is one and one thing only, in order to look at the financials of the company and see whether it is true and fair. Clear?
Okay.
How do you decide if it is true and fair? It should be according to the IAS, IFRS. Clear?
Mm-hmm.
Understood? Now, the regulatory bodies. So, regulatory bodies, we are going to divide it into two categories, UK level and an international level. Clear?
Mm-hmm.
Okay. So, we have a big parent body, which is IFAZ, Federation of Accountants. Clear? Under
Okay.
IFAZ. Now, the thing is, if you're going to do everything on your own, there might be imbalances on what you do, right? But if you're going to split up your work towards so many people, then small things would be taken care of easily, right? So
Mm-hmm.
the same thing happens with the IFAC as well. IFAC is going to be split between two categories of bodies. One is IESBA and the other is IAASB. Clear?
Okay.
That is IESBA Code of Ethics, and the other is IAASB, International Auditing and Assurance Standards Board. Clear?
Mm-hmm.
And this particular body is responsible for creating standards, both the ISAs and the quality standards. Understood?
Yes.
And this is there so that it maintains the code of ethics. Understood?
Mm-hmm.
Yes.
Okay. Now, on a UK level, what happens? There is IFAC, okay, and sorry, on an international level, there is IFAC, right? And under that,
Mm-hmm.
there is IASB. Now, on a UK level, instead of IFAC, we have FRC. Clear?
Okay.
on a UK level, not an international level. Understood?
Mm-hmm.
Okay. Now, the problem is that IFAC is a general body. IFAC is a general body, but they don't have a compulsory hold on all the countries, right?
Mm-hmm.
So, individual companies, they have their own auditing body, right?
Yes.
For example, in UAE, there is a different body that is UACA, right? Not
Mm-hmm.
UACA, EEEA, right? And in India, there is a separate body, right? And in UK, there is FRC. Clear?
Mm-hmm.
Okay, so IFAC is a common international body, but it is not necessary that every country would have IFAC rules and regulations or IFAC bodies. The countries would specifically have their own tailored bodies. Clear?
Clear.
Okay, understood, no?
Yes.
Yes, ma'am.
So same also happens with accounting standards. Okay, so accounting standards also in an international level you have IFAC. Clear?
Mm-hmm.
And on UK level you have FRC.
Mm-hmm.
Understood? Now,
Yes.
for the auditing standards, the international level is IASB and the UK level is APB. Clear?
Yes,
Okay.
ma'am.
Understood? Now, the major thing to be noted is that accounting standards and auditing standards both differ according to the country you are residing in. In India, we have Indian standards, IS, right? But here in UAE, we have IFRS because UAE and ACCA has an MOE. Clear? So, country by country, your rules and regulations would change. Okay, so there is no such thing as a common thing for everyone. It is common itself, but the standard bodies would be different. Clear?
Clear.
Now, development of ISA. How is an ISA formed? Okay. The first thing is the IASB, which is an international level and replacement for IFAC in terms of auditing standards, is going to take suggestions, reviews, the new developments in the market, etc. Right? And they're going to appoint a special team in order to discuss about this. Okay. And that special team is going to meet up so often. Okay. And they're going to come up with a plan, with a standard. Okay. And this standard would be made under consideration, under suggestion for 120 days. That is the exposure period. Clear? And this project task force is going to consider all the amendments, everything in under progress. Okay. And if there is any specific changes to be made, they're going to make it as well. Okay. And when the standard is finalized and approved by majority of the IASB, that is 2 by 3rd of the body, it's going to be released. Understood?
Understood.
Okay. After 2018, there were no new ISAs formed. Clear?
Okay. Clear.
There was no unusual things formed. So in ACCA, there is no ISAs formed, but in UACA, there is. Okay. So after I told you about it. After I think before 3 years, there was some scandal, and what happened as a result was the laws in this country was made stricter, right? So
Mm-hmm.
all the audit firms are under radar. Not all the audit firms have signing authority. All are under radar. Clear?
Clear.
Now, resignation of auditors. Okay. So first thing is with notice, auditors can resign anytime. Okay. And resignation is going to be effective from the date it is delivered to the registrar or the company house. Now, the third one, not effective until the SOC is attached. Until they reason out the things in a statement, it is not effective. Clear? Fourth
Clear.
one, the directors have 21 to 28 days of time in, or sorry, 21 days in order to inform all the others. Okay. And after informing, the meeting should be held within 28 days. Clear? Don't get confused.
Mm-hmm.
Okay. So that means the director from the date of resigning, that is from the letter of, that is when the SOC is given. From that date to 21 days, directors have the obligation to inform all of the others in order to meet or in order to get to a general meeting. And once that notice is issued, within 28 days, they have to hold the meeting. Understood?
Mm-hmm.
Now, fifth one, the auditor has the right to request a special meeting, and it is called as extraordinary general meeting. Understood?
Understood.
And the last one, they have the right to be heard, and it shouldn't be interfered or refused. Clear?
Mm-hmm.
Now, what is an SOC? So, SOC is a reasoning that the auditor is going to give a formal reasoning on why he is being resigning or why he is being removed, like that. Clear? And this is to be deposited to the company. Now, for quoted or listed companies, it must explain all the circumstances relating to the departure of the auditor. For unquoted companies, okay, even if there are circumstances, okay, or if there is no circumstance, the statement should contain that there is no circumstance, but a statement should be deposited. Understood?
Mm-hmm.
Okay, now if the auditor is going to resign, okay, SOC should accompany with the resignation letter. Clear?
Mm-hmm.
Now, if the auditor is not, or beforehand, the auditor has decided that he would not be uh, engaged in a future engagements with the company, or enter into a contract with the future engagements, then he should deposit it within 14 days. Okay.
Okay.
And this 14 days is before the next auditor is being appointed. Clear?
Clear.
Okay. Now, the sixth one, in other cases, okay, within 14 days, if the auditor is going to not work for the company, there should be another auditor. Clear?
Mm-hmm.
Okay. So, suppose I am leaving the company. Okay. So, within 14 days, I have to submit the SOC, and the company has the obligation to fill in the casual vacancy. Understood?
Mm-hmm.
Okay. Now, seventh one, this SOC should be circulated to everyone, that is the directors of the company. Okay, within 14 days, the company has received such notice. Understood?
Mm-hmm.
Understood, no?
Yes.
Yes.
Now, this notice, whom shall it go? It should be gone to all the people who are entitled to the FS review, or the FS, or who has the right to review the FS or receive the FS. Clear, no?
Clear.
Now, limitations of the audit, I think it was there in the previous chapter, right? Was it there?
Not sure.
Now, in the perspective of the public, what happens on the audit? Okay. If the audit report is very good, this year it is very fine. That means it was a normal opinion given. Okay. Even if that business which has the audit report that is true and fair could go out of business, right?
Yes.
So that is one thing. Second is, not all the transactions are checked. Third, the opinion is based on the evidence, and this evidence is often given to them by the company's management, right?
Mm-hmm.
Now, there might be strict controls and systems in the company, but this strict controls and systems could be overridden by the senior people in the company, right? Now, what
Yes.
is the benefits of the auditor? The shareholders would be able to rely on the information more than the managers, than the management, right?
Mm-hmm.
The shareholders are confident that a third party would report them a good perspective than someone who has been handling their accounts, right?
Mm-hmm.
Now, with the audit report, the management can ensure that their systems are working fine. Okay. And an audit report is most likely going to bring forward any fraud that is being committed in the company. That is what we believe. Okay. Next is, the business would be able to raise finance. That is what is happening most of the times here. That means you need an audit report for a bank facility,
Yes.
right? And the
Mm-hmm.
last one, the auditor is going to highlight any deficiencies which is there to the letter to the management. Understood?
Understood.
Okay, so the lesson is over. Any doubts, people?
So
Most of
far,
the
so
time,
good.
what I see is that people have doubts here. Okay. This is not a big thing. It's just that there are two bodies, accounting bodies and an auditing body, right? To simply put, um, that is why I prepared this particular section. For the standard setting, there is accounting standards and auditing standards, right? So, on international level, there is IFEC for accounting standard, or for an auditing standard, there is IASB on an international level. The main thing to notice, this is not compulsorily the standard body for every country, because they have their own thing. For example, since we are studying ACCA, we have the UK level, that is FRC and APP. Clear?
Clear.
Okay, that's all.
Yeah.
Any doubts?
No, ma'am.